Larry, the standard line, I think, for a moment like this would be, look, tech was the leadership group on the way up. Usually they don't necessarily lead the next run higher in the market. Yields rising, still some expensive big tech stocks out there. Why are you finding individual names here that seem to have fallen through the cracks?
Yeah, that's a great question, Mike. First of all, I just want to say that the names we're most interested in typically have pretty reasonable valuations on free cash flow basis. And I think, we put a lot of emphasis on that because we do think rates will remain a little higher for longer, partly because the economy is proving to be pretty resilient. But there's a lot of stickiness and structural shortages that are causing inflation, like energy, labor markets, and the like. So when you think about what's attractive in tech, we really start with, where are there good multiples and where are there stories where we think there's defensiveness or secular tailwinds that can drive earnings growth over time. And so that's how we come up with it. These names are already maybe beaten down a little bit, and that's where we see the values.
Yeah, and we are showing them, Analog Devices, AMD, as well as IBM. AMD, interested in, of course, it was very much in favor and kind of a darling on the way up. It's come down with the entire group. What's the thesis there?
Well, AMD is the Intel slayer. And, the stocks come in with semiconductors. And when the market catches a cold, semiconductors catch the flu, right? And that's a lot of what's going on with the sector right now. We think the negativity for AMD is way overdone. They have a very big product cycle coming out basically right now in the data center. It's going to be a big earnings driver for them. And we're also very encouraged with the acquisition of Xilinx this year. It really diversifies their revenue base into industrial and automotive. And those are areas that we think are actually going to play pretty well for an economy that's undergoing, reshoring and onshoring and infrastructure builds and basically industrial automation demand.
Yeah, that's certainly a big kind of capital infrastructure cycle underway there. IBM is interesting. It has outperformed this year. And my kind of surface level take is it's almost outperforming not because it's a tech stock, but because it sort of doesn't matter what it is based on its valuation and its dividend yield profile and things like that. But what's the actual corporate story there?
Yeah, so you nailed it. I think that is the reason IBM's outperformed. Underneath the surface, though, there's a massive transformation going on here. They've spun off Kyndryl, which was their big IT outsourcing division. They've refocused the sales force to basically cooperate and work with customers and not try to just sell them a big basket of services. But the real big story here is the secular tailwind for IBM is hybrid cloud demand. 70% of enterprises have more than one cloud. And they may have Azure, AWS, Google Cloud. They're using multiple clouds, and it's very expensive for these enterprises to manage these multiple clouds in one IT environment. So IBM under Red Hat, which they acquired a few years ago, is really making that easier. Now, investors really going to have to watch this next quarter to make sure Red Hat growth is in line with expectations, which is high teens. And the other thing is the consulting margins have been under pressure, which has hurt profits, right? So these are the two rubs where this is not a simple, straight, linear, up to the right story. It's a big transformation. It's gotten a little bit messy, but I think the risk reward here to us looks pretty asymmetric.